Welcome everybody to the AstroFx YouTube channel for all of our followers, old and new, and all of our new subscribers. This is the AstroFx team here once again, and today is the official day for the startup of the new and improved volumes of Technical Tuesdays.
That's right, Technical Tuesdays are back, and this time we've revamped everything. We've got new equipment, new software, new production. So far we've done about 17 Technical Tuesdays all on our YouTube channel, where what we do is the AstroFx team, we analyze the foreign exchange market, the Forex market for all of you guys. We analyze it, we give you trade setups, and just give you predictions on what we think is going to happen. And we have had over a 90% success rate. So from popular demand, we've decided to come back.
Yeah. Indeed, guys. Now, may I mention the core of FX trading is in fact technicals, and many of our previous viewers will understand that and remember that all we are here to do is share a bit of our insight on the charts on our selected currency pairs. Never take anything we say as complete gospel. Always use the recommendation and technicals in alignment with your prior Forex education and knowledge, and so to speak, just so you guys can get an insight into what we're about. We like to showcase our skills on Technical Tuesdays, and overall for you to gain some more market knowledge and gain some pips.
That's right. So in the last 17 volumes, we pretty much just shared the screen, and we showed you guys what we think is going to happen the following week. However, from many popular comments and emails that we actually got, we took your advice, and we're actually going to bring you guys so much more. So not only the technical side, even though that's 80% of what we do, but this time around we're going to be discussing hot topics, so the important stuff that's happening in the Forex market that you guys need to know. On top of that, we're going to have fundamentals, so the news releases that actually matter, we're going to be talking about them on Technical Tuesdays. And on top of that, just trading tips and advice. Anything that we can do to make your guys' trading week more positive will be here on Technical Tuesdays.
Yes, and for those guys who are new to us, new to our channel completely, and wondering who the hell we are, let's just explain. My name's Sean.
And my name's Nat.
Okay, so we're both self-taught traders, and we've been in the foreign exchange market for around 5 years. Now, beforehand, me personally, I followed the formal route of education. I landed a decent engineering job, etc. However, it wasn't as fulfilling. I always wanted to, venture out on my own, start something where I could make not just more money, but have more freedom. And that's when I was introduced to the foreign exchange market by a family friend. And that, guys, is when the real hard work and dedication actually started in my life.
That's right, and my background's a little bit different. I was studying full-time at university a long time ago now, roughly about 5-6 years ago, and whilst at university it wasn't really for me. However, I had been told that was the only way to actually be successful in life. So whilst at university in my first year, I came across the foreign exchange market, and when I discovered Forex, I thought, wow, this is actually something where the more effort I put in is the greater rewards I'm actually going to get back. And that's exactly what happened, and that's what's placed us right here in front of you today. So that's a little bit more background about us two, but now I'm sure you're probably thinking, what about AstroFx, for those that actually don't know. So AstroFx has been registered for what, about?
Around 9-10 months now.
About 9-10 months now. However, we've been in the shadows for years.
Yes.
As soon as we realised that we were successful at the foreign exchange market, we've always been trying to help others. However, from the overwhelming demand, we actually have started to now teach other people. Now, trading in ourselves is our only income. It's our main income. We don't have part-time jobs. We've been doing this for years now. However, we knew that all of the experience we've been through, we could relay onto other students.
Yes, indeed, guys. As I mentioned, our journey was self-taught, and many of you viewers now can maybe relate. Trying to teach yourself the ins and out of the Forex market can be extremely difficult. Okay, you can pick up so many bad habits, you can hit so many barriers, you can fall into so many traps, which we're going to get into later on. However, we actually survived all of these traps only through persistence. It was a do or die situation overall. Again, what kept us going was the actual thought of going back to that 9-to-5 routine, and eventually we did actually just scrape through. And that's again, on our previous videos you can see our skill set and what we can actually offer to you guys.
That's right. So now we're in a position where we actually get to help others, not only on Technical Tuesdays, but we actually do hold courses here in the UK and non-UK, where we've met tons and tons of fantastic students, and we've actually helped them turn profitable. So yeah, that's more the consultancy side of what we exactly do. And I think over the last few years, something we've actually especially realized is that common sense isn't that common. And what I exactly mean by this is that every single day people are entering the market, if not every single hour, and they're going to come in the Forex exchange market with no research, no knowledge, and they actually don't know who to trust. And most likely 90% of stuff that's actually online, which you guys might have been through yourself, is probably false and probably written by people that are not profitable themselves. So the first thing that we actually did was show you guys we're profitable. So if you go on our website, click on the results tab, we have over 3-4 accounts on MyFX book, all verified. So at least you guys know what you're about to take in is all from 2 profitable traders, which we want to get out the way straight away.
Yes guys, and alongside that, again, just these technicals, the market is 95% technically biased. So again, this is what any student that comes to us, and may I just add, many people who do get in contact with us, we can see certain traits in these people in which we used to hold ourselves. Now, going online, again, you're picking up so many bad habits. However, we've had so many students who have been fresh to the market, which is often a more positive thing, because then it's like a clean slate, and we just program you with those tools, like guidance and ongoing knowledge, in order to be successful overall.
Yeah, so now you guys are probably thinking, okay, if you are watching this video for the first time, exactly what we do. So apart from Technical Tuesdays, should we talk a little bit more about Forex?
Yes, so Forex, okay, for you guys who are new, Forex, FX stands for foreign exchange. The foreign exchange market on the whole is in fact the biggest in the world, turning over 5 or so trillion. Again, in comparison to the stock market you can trade it, turnover's a lot less, however it's only really active in business hours, whereas the foreign exchange market is 24 hours a day, 5 days a week, meaning we can just trade all day, whenever we want, really.
From wherever we want.
Yeah, from wherever we want, with a laptop, okay, by putting money into a broker, which acts as the middleman between you, known as a retail trader, and the market, okay, and then we use the charts to determine directions of where a currency pair can go. So currencies, there's more than 200 official currencies in the world. However, we like to narrow it down to the ones that we can master ourselves, like the euro against the dollar, pound against the dollar, USD against the Japanese yen, and so on. And again, guys, you can buy and sell in this market, so it's actively tradable 24 hours a day, 5 days a week, and we're here to give you as much information and beneficial support as we can for your success overall.
That's right. So, if you guys are retail traders like me and Sean, then, you can trade your own investment. If you guys are interested in the foreign exchange market in any way, then hopefully our opinions will make you guys some money, and if not, then definitely give you guys some knowledge. So the usual Technical Tuesdays will roughly be about 20 minutes long. However, today is a bit more of an introduction for all the newbies that are out there here today. So yeah, we're going to be talking about some other aspects of the markets, and then we're going to jump straight into the charts. So hope you guys enjoy Technical Tuesdays, first of many. Let's go.
Now guys, you may now all be wondering, okay, so how exactly do AstroFx on the whole interpret the market, find market sentiment, bias, and overall how do we extract profits and pips from the certain currency pairs that we actually specialize in? Now there's 2 aspects, main variables of trading the FX market. Okay, we have the fundamentals and we have the technicals. Now FX is particularly it's easy to actually master in comparison to other markets, as it is more technically biased. So what that means is we can focus and direct most of our attention on the charts and learn how to read price efficiently. And they have the fundamentals. We have certain fundamentals that will impact the market. However, we don't like to get heavily involved in certain fundamentals, as we understand that the market is heavily manipulated and it's 95% technically pure, so we can rule out a lot of time and energy and focus always looking at certain fundamentals, because the technicals can paint a clearer picture in regards to where the market's going to go. So then two variables, we can relate the fundamentals and technicals, the way of thinking behind both of those certain methodologies, to the human brain, for example. So we have the left brain way of thinking and the right brain way of thinking. Left brain is basically how the education and school systems are set up. We're learnt to absorb certain topics and and extracts of information, and then it's how we retain that information and regurgitate it at a later date, which will determine your destiny and fate in the present moment, and in whatever subject you've studied in. Now we can relate that to fundamentals, as the left brain is dealing with numbers, reasoning, trying to establish certain facts and match them up to why they should work in the market and so forth. And overall, it doesn't require a lot of creativity, where I always like to say technical analysis is something you really have to get heavily involved in, throw the stuff on there, or read the price action. You have to make it fun. It's like artwork. So that's where the right brain comes in. We're using creativity, and we're also using a lot of images, because whereas people think the market, you don't have to be that good at maths. It's just about recognizing patterns that occur time and time again, using that creativity and that intuition aspect of the right brain in order to just match things up. It's all about confluences and high probability trading setups. So with that being said, technical analysis is what we specialize in overall, and we do like to say it does require spatial intelligence, where we always have to get deep involved. We need to connect our mind straight through the charts and always envision what can actually occur in the market. So we're always envisioning, okay, will this work out for me? And it is something that you can only require chart time to actually improve on, build, and so forth. So we'll touch base on that.
Right guys, we're about to quickly break down some of the most commonly traded pairs by AstroFx and show you our prediction, our analysis, and our breakdown.
Yes guys, I'm going to go in head first with the Euro Yen at the moment, and I posted some analysis for the past 2 weeks focusing primarily on the Euro Japanese Yen. However, we are at a critical point for many of the actual major pairs and the pairs that we do focus on. So I might have to switch up my bias here a little bit. I was looking at this trade from the angle of a short, but I'm just going to get straight in and just let you guys know exactly what I see. So here, straight on the charts, okay, this is currently sat on the 4-hour time frame. Now we've been in this descending wedge formation for a good week, nearly 2 weeks now, okay. And with that being said, as you can see, we are at a level of resistance over at 135, okay, and you can see the support here. We've broken through, we've retested once, twice, and now we're on that third initial retest. Two things can simply happen here, guys. Key level, it can break or bounce, and it's a very, very strong key level. So what we have to do is break up 2 recommendations as to what can potentially occur. So a break to the upside, okay, will lead us to, just looking at this chart, I can just tell here that we've got some next level of resistance for the Euro Yen is in fact 137.60s, okay. And as you can see, these range, the height and the body of these ranges here are the same-ish in terms of pips, 200, 250 odd pips each, okay. So a break to the upside of this key level here, where this yellow marking is, we will probably see the 137 level. Other hand, if this is rejected from the 135 and we do break this counter trend line here, we can indeed be looking at where I've put this arrow. First target to the downside 132.50s, and then 130/50s just to be safe. A break of that, because I'd just like to point out here, 1 second, let me just get onto the daily chart. As you can see on the daily chart, we have seen some a rapid decline from the 149s. Again, 149s all the way to 130, so looking a substantial amount of pips. So this here, the 130s, was in fact the low of 2015 so far, and in a downtrend play, the relative simple rule of price action is that for a last lower low which is created in a downtrend, it will make a new lower swing high. See, this here was the last lower swing high, and then this whole bundle of messy price action could in fact be the next area, a swing high, only if the 135 handle does in fact hold, as you can see here, with strong support for the pair. So again, a break to the downside of this counter trend line. Such setups we will be looking to execute on the 2-hour, 1-hour chart again. Many people often ask what time frames do you use and so forth. Again, that creativity has to come in. You have to use many different tools. You have to look at the whole spectrum and whole aspects of the market, and then you can zoom down and go with the overall momentum / bias. But this is at a 50-50 point now. So again, to the downside, with that price action rule being said, 130 candle would in fact have to be taken out in order for the pair to make a new lower low. Let me just go to the higher time frame a moment. As you can see, we have certain levels of support here. This is this 130 handle once again, but as you can see, this is looking kind of bullish. We had a bullish momentum in this week prior and the week prior to that also. So again, looks like we do have the resistance lining up nicely on that 137 if 135 is broken. So again guys, this is like 50-50 right now. However, if we do go up and break the 137, we could maybe visit, you know, mid-range from the highs of 2014, which could be around 141s. But this is one that may definitely break out one side or another in quite a violent manner. So as you can see here, this huge move, you know, it's a good over 1,000 pip move in such a short space of time. Now the market has seen some unprecedented, you know, major moves recently. Now one that I'm going to touch base on now is in fact the Swiss franc. Again, we had a major fundamental release that came out on the 15th of January, I believe. Okay, that did in fact shake the market and shook many financial institutions, brokers, etc., which I'm going to go into now. So the Swiss franc, so let's just go over to the next chart, which is in fact Euro Swissy. Okay, so as you can see already on the daily, this huge down move here. Now we're just going to go into a little bit of further detail on what exactly happened, because when this did happen, you know, I'll explain in a moment about the brokers, etc., but we haven't had time to come out here and explain fully what actually happened in regards to why the Swiss franc gained so much strength. And again, we have so many messages, emails, and even some of our students asking, okay, can you clear this up? So now me and Nat are just going to go through it and just give you guys a heads up and just clear up what's happened and give you our take on the actual subject.
That's right, guys. This is one of the biggest moves we've ever seen in our trading career. We woke up about 4 a.m. and we were bombarded with messages and comments and people trying to call us saying, what the hell has happened? So again, as Sean said, we haven't really been running Technical Tuesdays for the last month or two. So right now, let's go into it. So as you can see on the chart here, we had a cap, and there's a cap on the Euro Swiss for the last, I think, about 3 years, and the cap was around about 1.20. So let's just find that.
So here guys at 1.2, and as you can see, strong key level of support since, you know, June 2011. So that was that major boundary there.
That's right. And basically what happened, every time it came towards this 1.20, the Swiss National Bank would not allow it to dip below, and every time it would even try and touch the 1.20 barrier, the Swiss bank would do whatever it takes to buy back and keep it above the 1.20 section. Now, in anticipation, if it ever did break below the 1.20 section, they expected hopefully a gradual fall. But that's not what happened on the 15th of January 2015. Around about 4 a.m, we couldn't believe it. From 1.20,
yes guys, from 1.20
all the way down to what, 103s, 104s?
Yeah, in such a you know, a couple of minutes to say the least. Now this is the biggest move ever seen, apart from this, you know, major decline. Now I remember when this happened, okay, in the summer of 2011, and again that took many days, whereas this move did in fact just happen in a matter of minutes.
Yeah, that's right. It was over a 1,700 pip fall, one of the biggest moves we've ever seen. Now a lot of people are curious about what would have happened if you had a stop loss on and what's going to happen to my money. Now guys, let's get this sorted. Right, it's not like a demo account. On a demo account, yes, if it comes towards your stop loss, you'll be exited at the market price. However, if you have a real account, which I know millions of traders actually did at this point, it doesn't hit that market price. What happens is your broker's notified that your stop loss is there, but when your broker's notified, it's their job to get you the instant best price they can to get you out at. But if this was found in a few minutes, 1,700 pips, there was no way they could get you out in time. And in that case, people actually lost more than their initial investment.
Yes, indeed, guys. As you can see, as Matt mentioned, 1,700 pips. I think the overall fall, I know on the USD Swiss franc, because I'm not one to always look or trade any Swiss franc pairs. We said to all of our students, we just use mainly the USD Swiss franc for its beneficial connection against the Euro USD, but we never ever recommend really trading these pairs. Okay, so as you can see, 2,400-ish pips overall.
That's right, and people were just thinking that the Swiss bank would just keep helping them out, but because of this fast movement, people have lost thousands. You know what? People have lost hundreds of thousands, and that's just the retail trader side of it.
Indeed, guys, so let's just do a little bit of calculation, shall we? So again, we've heard many horror stories. Okay, that morning we were actually actively in trades, and I'll go into the broker in a moment, but let me just give you an example as to how catastrophic this could have been, even for any new trader who followed risk.
So terrible for any new traders that came into the market.
This heart attacks probably were caused on the morning of people waking up, because again, in GMT over in England, this happened early hours of the morning. So let's say you had a £10,000 account, and let's say you were working at 3% risk, and let's say you use one standard lot. You went long on any Swiss quote pair, sorry, and let's say you had your stop loss in place. You wanted to, let's say £10 a pip, so hit your 30 pip stop loss, you're going to lose £300. Now, because the move was so crazy and so violent, as Nat mentioned, the broker has to get you out at the nearest market price to your stop loss. Okay, and because the servers, etc., they couldn't handle the amount of selling pressure and whatnot. That even if you had a stop loss on at that specific moment in time, because the market moved so many pips, the brokers could only realistically get you out at the market price when the market really started to calm down a little. So as I say, £10 a pip on a £10,000 account. Let's just take the USD Swiss for example. Okay, if you were long on the USD Swiss, boom, 2,400 pip drop. You wake up in the morning, you had a nice £10,000 in there, and now you closed out all of your orders. You look at your broker account, now you're minus £24,000, okay, from that 2,400 pip move using £10 a pip, where you were expecting, worst case scenario to be what, £300, and this has happened to many traders across the world. Okay, so with that being said, the brokers are the ones who had to really pay the price.
That's right. That's a sad reality which a lot of traders had to wake up to that morning. And basically, to talk a bit more about brokers, so what actually happened is, let's take FXCM for example. They actually lost so much, I think it was around 225 million, that they actually went beyond the market requirements, which basically means that the on-hand capital was down 225 million. So FXCM was one of them, along with other brokers that to pretty much close up shop. Apari being one of them.
One was being Apari, which we use personally. Okay, now Apari, as I say, we don't actively trade any Swiss franc pairs, but in the morning, early hours in the London session, everybody's active trades are open, we're closed. Okay. And what happens, Alpari, don't get me wrong, they're a very good broker, and within FCA regulations, all the retail traders' capital is all stored in segregated accounts. So those people who have just the money stuck in there, they've had to fill out a specific form, and again, we're still waiting to hear back from Alpari, etc., alongside many other people, as to when and if them funds are going to be released to each and every individual customer.
That's right, and even when it comes to hedge funds, I think we actually found out that one of the biggest hedge funds in the world were down on their primary funds around about, I think it was over 800 million, completely wiped out from this big move. And so it's everyone pretty much got stung, but if we had to kind of think, what can we actually take away from this? And it's pretty much just that anything can happen in this market. You can be paired as much as you want, but sometimes you've just got to take some stuff on the chin, and that's just a part of the job role when you sign up to being a trader. Like me and Sean with our Apari situation, it's not ideal, but we're in the same boat as millions of other people.
Indeed, guys, that's why we focus primarily on technicals. the way we endorse our market methodologies, strategies, etc., is we'll teach students, for instance, about fundamentals and the main ones to look out for. However, again, as I mentioned, the slippage factor of the broker cannot close your trade because there's so much volatility in the market. It's like non-farm payroll. You may have experienced it yourself. You enter a trade in non-farm payroll, and because the price is just going so crazy, you're trying to close it and you're just getting requote off the broker. Now this is a similar scenario. So again, with that being said, this is why we don't look at the fundamentals, and we teach you, okay, if we've seen such event coming out at a specific time, just close the trade, because anything can actually happen.
And so a lot of people are actually asking us what's going to happen from now. And the thing is, so as Sean mentioned as an example, you technically owe the broker money. That's what's actually happened to tons and tons of traders. And the thing is, the sad truth is, those brokers will try and claim on the money that you actually owe them. And this is going to lead to bankruptcy from all over, and tons of traders are going to feel the harsh effects. And it's almost one of those ones where you can be careful as much as you want, but you've got to always understand the risks of the market. This is why we try and be careful with who we accept here at AstroFx. You can't trade when you don't have those funds available. And for us, hopefully we can come back from this. Like I said, we've got quite a few different accounts, so it's not really much of a problem for us. But yeah, definitely traders out there being stung, and it's quite a sad reality to see what happens from now on out.
Indeed, guys. So again, that's just a little wrap up of the Swiss franc and what actually occurred. So yeah, we're going to just move on now. Hope that clarified a few issues and so forth. Again, we're not heavily fundamental traders, but with such an event taking place, we had to, especially because it impacted us as well as traders, we had to obviously take heed and gain further insight. So what I'm going to do now is I'm just going to step over to the Euro USD. Now, I'm just going to, one second. Okay, so as you can see on the Euro USD now, for those who have been following us for the longest throughout the second half of 2014, for instance, knew that we were in fact short Euro USD from all the way up here, the 1.3s. We had specific targets, one being this level around here, the 1.27, 1.28 zone. Actually, I could probably just highlight this whole zone here. Okay, and you can go back to our previous volumes in order to see our technical analysis in real time when the Euro was trading around these levels, and exactly why our technicals pointed us in the direction of these specific downside targets. Our next downside target was 1.2, okay, and I did in fact think always trade what you see and not what you actually think. But however, I thought because this extended downtrend on the euro was so powerful to say, without no viable retracement, Fibonacci retracement, I did think we were going to hit this zone and maybe pull back a little. However, we smashed straight through the zone, and it was a very, very clean break as well, because this candlestick right here was in fact a Marubozu. Doesn't have a wick on the end, which indicates strong momentum, okay, in the market. So again, for that specific week, the week bias afterwards, if you know how to read price, if you know how to read candles, technicals and so forth, this told us we're going lower. So indeed, we did in fact go lower. Now we've found a base point of support. Okay, so let me just try and, okay, so we have the support. Now if you add this onto here, 1 second. Okay, so we did in fact hit the 1.12 level, and again guys, for those following us, we did take multiple profit targets on smaller time frames to this level. Now we have seen significant dollar strength again for the second half of the year, maybe because the Fed was outlining that interest rates may be on the rise, okay, and also with that being said, the European Union, which is still being talked about at the moment, are in fact beating around the bush when it comes to, are they going to launch quantitative easing and so forth. So again, quantitative easing would in fact bring the euro down a lot lower. That might be the reason as to why we've seen a significant decline in our euro yen too. Okay, so again, with that being said, back over to the euro Swiss. If the European Central Bank do agree and go ahead with quantitative easing, obviously that euro weakness there, with so much euro weakness and so much euro selling, it would in fact put extra pressure on the Swiss National Bank to actually hold that 1.2 benchmark also. So that massive crash in the Swissy does in fact give us a heads up as to what could potentially occur in euro USD, which is further weakness. Now, me just studying candlesticks, okay, last week's candlestick was in fact a doji representing indecision. Now, indecision and dojis, we don't just sell straight off the bat. We do have in-depth strategies, which I don't go into in any of these technical videos. I'll just give you an overall insight. But yeah, doji represents indecision despite going upwards. Again, rejected at a 1.14, 1.1450 handle, and now expected to break this level and go lower. So yeah, with that being said, again, we have the Marubozu here, okay, Marubozu candle here on Friday, and we had a minor area of resistance, okay, which was former support, read breakout, retest, continuation. And again, if we do break lower, price action does suggest we're going to take out the last lower low. So in fact, I do Euro USD, we're going to drop significantly more. Technicals are pointing down, and we always say to our students and people, again, you can go back on the historical videos, that fundamental aspects and economical variables do in fact just give the market that extra kick in line with the technicals anyway. So Euro USD expected to come lower. Again, major barrier of resistance is 1.15. As long as we stay below that level and break this 1.12 level, we're looking at 1.1s, then 1.108, 107. So I hope that helps on the Euro USD. Because we're running quite fine on time, I'm just going to switch over to gold. Okay, I was going to go over the Aussie, but I'll leave that till next week. So let me just go over gold real quick. Gold again today on our Twitter and on our Instagram. Okay, Twitter is at AstroFx13 Pro, and our Instagram is at AstroForex, where we do in fact outline certain trade setups. Here we have the gold versus the US dollar on the 4-hour chart. Now gold, let me just switch over to the weekly. Okay, we've got the weekly here again. Swing high, swing high, swing high, swing high, swing high. 1 reversal, 2 reversal, 3 reversal. Hanging man here and a follow through also. Again, there's specific ways to trade these candlesticks and read them, alongside getting creative with other technical aspects and price action strategies, which we do give to our students. So again, that was the last lower low here at 1130s. I remember calling that. I did in fact think it was going to come to 1100s. But however, if this follows through, again, a new lower low is in fact going to be expected. So 1100 handle, medium term, then the 1000 handle. However, for now, for now, we are in fact looking, okay, we are looking technically to fall down to profit target 1, 1205, 300 pips ish from where the current market price is now, and a break of that level, 1180 downside target 2. So 500 pip a decline expected. However, goes lower than that, then we have to reanalyze and look for certain trade setups. So again, guys, use these technical viewpoints and standpoints in alignment with your current market knowledge. Okay, never trust any automated systems. Do all the analysis yourself. You can't beat the human brain. Scrap all the robots and indicators, because they're just regurgitating historical information, and we need to get more creative than so, which I mentioned earlier on. And yeah, I'm going to wrap up the technicals here and now. Okay, so Euro Yen 50-50. I've gone over Euro USD, explain why I have my bearish outlook, and then gold also bearish outlook. And yeah, I hope that covers all that's necessary at the moment on them pairs.